The Peter Schiff Show.
Today's podcast is sponsored by Indeed. Indeed knows hiring needs to be cost-effective when you're running your own business. Start hiring now with a $75 sponsored job credit to get your jobs more visibility at Indeed.com/Peter. Terms and conditions apply. Today's podcast is also sponsored by Shopify. Shopify is a platform designed for anyone to sell anywhere, giving entrepreneurs like myself the resources once reserved for just big business. Sign up for a $1 per month trial at shopify.com/gold, all lowercase. Good evening, everybody. Well, earlier today, the Dow Jones Industrial Average, for the first time ever, traded above 40,000. Now, we almost got to 40,000 the last time the Dow made a record run, but it turned south before actually crossing the milestone. Well, it finally did that today, though it didn't hold 40,000. It actually closed down on the day. It wasn't a big decline, but it was enough to push it back below, I think even 39,900. But not only did Dow Jones hit a record high today, intraday, but so did the S&P 500, and so did the NASDAQ. I think the one main index that did not make a new record high was the Russell 2000. And of course, you know, the high is a nominal new high. And I think, and I mentioned this on the last podcast, but it's going to be increasingly more important to put the Dow price into perspective. Because it's very possible that the Dow could keep going up. But that's only going to be in nominal terms. In real terms, I think the Dow is headed substantially lower. The best way to look at it, and all the stock markets for that matter, is priced in gold. Gold almost got back above 2,400 this week. Turned back, it got to like, I think 23.95. It's not that far away now, 23.70-ish, something like that. But if you measure the price of the Dow in terms of gold, just take the Dow price and divide it by gold, it's fewer than 17 ounces. That's about where the Dow has been for quite some time now. It's been around that range, maybe even a little bit higher. The all-time record high for the Dow in terms of gold was in 2000. That was at the beginning of the millennia. The Dow actually got above 40 ounces of gold. Because remember, at the time, gold was around 300, and it's now, 2,300. So gold has risen a lot more than the Dow over that period of time. But if you actually want to go all the way back to some prior peaks in the Dow, significant peaks in the Dow Jones. 1929, before the infamous stock market crash, that peak of the Dow was 20 ounces of gold, approximately, 1929. Now, when the market crashed, Dow got down 1932-ish to close to 1-to-1, not quite 1-to-1. With gold. The next time the Dow was worth 20 ounces of gold was 1966. Long time to get back up to that high. It didn't really make a new high. And then it crashed again. And by the early 1980s, we were actually lower than 1932. We got even closer to 1-to-1. But in both circumstances, we were below 2-to-1. But not quite 1-to-1 exactly. But we got close. And this next bear market might actually take us all the way down. We may actually get to 1-to-1. We'll see. But I mean, if it gets anywhere near, if it gets less than 2-to-1, that is a massive decline. So for the Dow to be 2-to-1 with gold, if it stays around 40,000, gold would have to be 20,000 for 2-to-1. Now, the Dow may not stay at 40,000. Maybe it drops to 30,000. And then gold only has to be 15,000 an ounce, not 20,000 an ounce. But What if the Dow goes to 100,000? What if there's so much inflation that we have 100,000 Dow? Does that mean everybody is rich? Well, no, not if gold is 50,000 an ounce, because it means that you can only afford 2 ounces of gold with the Dow Jones. Right now, you can afford almost 17 ounces. So this is something that you got to keep in perspective, because inflation creates an illusion of prosperity, an illusion of wealth. That's another reason that government loves inflation so much. I mean, they're really partners. The government derives all sorts of hidden benefits from inflation, but it never wants to admit this, right? It never wants to say this out loud, right? But everything the government does is supported by inflation. In fact, you could say that inflation could be the god, the deity of the government. They kind of worship inflation, but they never speak its name. I mean, not in the context of what they're using it for, right? And so when the public gets upset that prices are rising a lot and their living standards are falling, then the government will talk about inflation, but it'll talk about it as if it's this exogenous event that is completely beyond their control. It's just something that happened. Like Biden claiming that it's corporate greed, right? And I explained this on the last podcast, as if corporations weren't greedy. They were just a bunch of altruists up until a couple of years ago, when they finally discovered their inner Grinch and decided that they were being too nice and they were leaving all this money on the table. And so now it was time to put the screws on the consumer. And it just so happened to coincide with Biden being the president, right? And so he's got to deal with this corporate greed. These are the inflation chickens coming home to roost. This is how the government has been financing its budget deficits. This is how the government plays Santa Claus. This is how the voter gets something for nothing. Well, you don't get something for nothing. People are paying for all that something now with much higher prices. But apart from that, by driving up nominal numbers and then not properly measuring them, I mean, that's another objective of the CPI, why it's deliberately designed not to capture the full extent of inflation's impact on prices, is the government can pretend that things are getting better because people are earning more. People's homes are worth more. Their salaries have gone up, right? Or their net worth, their stock portfolios. Everybody has a bigger number, right? Not too long ago, it was hard to make $100,000 a year. That was a big salary when I was young. It's not a big salary anymore, but people think, wow, I'm making $100,000 a year. I must be doing great, right? Because it's a bigger number. And so the government can get people into this false sense of prosperity that they're earning so much money, or their house is worth so much money. People feel rich because they own this expensive house, but they're not getting rich. Right? The value of the money is going down. And so, sure, if the money is losing value, then the prices have to go up to reflect that. And that's what's going on with the Dow Jones. When the dollar, or when gold rather, was $20, which is where it was from the birth of our nation, the signing of the Constitution, up until Roosevelt devalued in the 1930s. For over 150 years, the dollar, $20 is what you need to buy an ounce of gold. That's all you needed. Now, with the Federal Reserve and all the government spending, it doesn't take $20 to buy an ounce of gold. You need more than $2,400. That's how much value the dollar has lost. Well, it hasn't just lost value in terms of how many more dollars you need to buy an ounce of gold. You need a lot more dollars to buy the Dow Jones. You need a lot more dollars to buy anything. But does that mean the Dow Jones has gone up? It hasn't. It was worth 20 ounces of gold in 1929, and it's worth less than 17 ounces of gold today. So in real terms, the Dow is actually cheaper than it was in 1929. Now, that was a peak, right? That was the top of a bubble. So the Dow was very expensive in 1929, right? So it's not really a great comparison to say that the Dow hasn't gained any value when I'm going to pick, such a overpriced moment in time. But it does uh, put things into perspective that if you buy in a bubble, if you buy when the Dow is expensive, it's not a good deal. I mean, in general, stocks are a good investment if you buy them at the good price and you can get a good return. But they're not a good long-term investment if you buy in at a peak. Of course, it's hard to know exactly when you're buying at a peak, when you're buying there. Of course, nobody thinks they're buying the top. Everybody assumes that it's going to keep going, and that's why they buy. But in a mania, in a hysteria that we had at the end of the 1920s, which coincided with the Fed. The Fed caused that bubble. Even Alan Greenspan blames the Fed for the stock market bubble in the 1920s, right? He was very good at blaming the Fed for bubbles before he became Fed chairman. He was very good at calling out other central bankers who made mistakes, kept interest rates too low, and inflated bubbles, right? But when he became Fed chairman, right, he just did all of the stuff that he had criticized prior Fed chairmen for doing before he was on the Fed. But in any event, the people that got suckered into the market and paid 20 ounces of gold for the Dow, those shares are worth less than that today. Now, of course, it's a different Dow. There's very few stocks. I forget how many of the Dow 30 in 1929 are still here. Maybe 2 or 3 of them. I actually forget. Maybe I should have looked it up before the podcast, but I didn't even know I would be having this discussion because, I kind of ad-lib these things. So I really didn't know that I was going to talk about this. So had I been prepared, I might have checked it out. But I know that most of the companies aren't even in business anymore, right? So they have to substitute them with new companies. So again, it's not apples to apples. It's, different fruit there in the basket. But the point is that the Dow is lower now than it was at that high point. Now, if you held the Dow Jones for it's not quite 100 years. It'll be a 100-year anniversary of the 1929 crash in 2029, right? So it's over 90 years, but not quite 100. But over those 90 years, if you were a little kid and you were born in 1929, and your parents, your grandparents gave you 100 shares of the Dow, whatever, and you still own them today, and you're still alive, you made money because you earned dividends. But the principle, assuming you didn't reinvest the dividends, let's say you use the dividends and you've been spending them for the last 90 years, and you just have the Dow, right, or whatever, it's actually gone down. If you sold the Dow today, you would get fewer ounces of gold, a little bit less than what you would have got had you sold those shares 90 years ago at that time, right? And so that shows you. Now, you get a lot more dollars, of course, right? You get way more dollars. You get more than 20 times the number of dollars. But that's meaningless because the dollar today is not the same as the dollar in 1929. It doesn't buy what it used to. It's not just that you need 100 times more dollars to buy an ounce of gold. You need 100 times more dollars to buy just about anything, right? Everything is more expensive because of the government debasement of our money. That's why we have inflation. It's not an accident, and it's not a natural byproduct of capitalism. Capitalism does the reverse. I pointed this out, but the CPI from 1800 to 1900 lost 50% of its value. Prices fell for 100 years. That's what capitalism does. Now, in the following 100 years, prices skyrocketed. That's what socialism does. That's what government does. That's what central banking does, which got mixed into capitalism and diluted it and distorted it, and we're dealing with the consequence. I got a quick commercial break. We got more to discuss, so stick around. I'll be right back.
We're driven by the search for better. But when it comes to hiring, the best way to search for a candidate isn't to search at all. Don't search, match with Indeed. If you need to hire, you need Indeed. Indeed is your matching and hiring platform with over 350 million global monthly visitors, according to Indeed data, and a matching engine that helps you find quality candidates fast. Ditch the busy work. Use Indeed for scheduling, screening, and messages so you can contact with candidates faster. And Indeed doesn't just help you hire faster. 93% of employers agreed. Indeed delivers the highest quality matches compared to other job sites, according to a recent Indeed survey. Leveraging over 140 million qualifications and preferences every day, Indeed's matching engine is constantly learning from your preferences. So the more you use Indeed, the better it gets. Join the 3.5 million businesses worldwide that use Indeed to hire great talent fast. What I love most about Indeed is how simple it makes the hiring process and allows you to do all your hiring in one place. Candidates you invite to apply are 3 times more likely to actually apply for your job than the candidates who see it in search alone, according to US Indeed data. Indeed gets you one step closer to the hire by immediately matching you with quality candidates. And now listeners of my show can get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/Peter. Just go to Indeed.com/Peter right now and support our show by saying you heard about Indeed on this podcast. That's Indeed.com/Peter. Terms and conditions apply. If you need to hire, then you need Indeed.
So I want to continue the discussion of inflation, but from a different perspective, because it was inflation news that actually sent the markets to new all-time record highs. And the report that really did it was the CPI report that came out on Wednesday. This was the April number. Now, the day before, on Tuesday, we got the producer prices. And when that report came out, it was a different story because that was actually hotter than expected, meaning that the numbers came in higher, which is not good with inflation, right? You want inflation to be low, right, not high. And the expectation was for a 0.3% rise in April. And instead, we got a 0.5% rise. The core, right, excluding food and energy, was supposed to rise by 0.2, and it rose by 0.5. So in the wrong direction and headed higher. And the year-over-year numbers, while in line, at least the headline was in line at 2.2, it was higher than actually a downwardly revised 1.8 from the prior month. So now inflation trending higher, which is not what the markets wanted to see. And ex-food and energy, we were at up 2.4, which was slightly more than they had expected at 2.3 and was in line with the prior month. But this was greeted as a bad number for the markets. And so the markets were nervous ahead of the CPI number that came out the following day. And I guess maybe people were worried that, okay, here's going to be another bad CPI. The first 3 for 2024 have been bad. They always come out higher than expected. So maybe some people were afraid that it was going to happen again. Well, we got the numbers, and there was a big sigh of relief. And that caused the rally, I think, in that the number wasn't worse than expected. It was basically as expected. Although I saw a lot of news reports that were trying to put a spin on this as if this was somehow better than expected news. It was only better than expected in that it wasn't worse. But, that's a pretty low bar. But the expectation was for up 0.3, and we got up 0.3. I think what people were happy about was that it was lower than the 0.4, even though that's what everybody expected. The fear was they weren't going to get what they expected. They were going to get something hotter, and they didn't get something hotter. And so the markets rallied. Year over year, they were looking for 3.4. They got up 3.4. And again, that was a tick lower than the 3.5 from the prior month. Year over year, up 3.6, exactly as expected, but an improvement of the 3.8% from the prior month, year over year. So the markets had a big rally. The dollar went down, gold shot up. Everybody was excited about this. Bitcoin also had a big update, finally going in the same direction. I've noted Bitcoin up until Wednesday had been negatively correlated with gold. Every time gold went up, Bitcoin went down, or vice versa. But everything went up yesterday on this supposedly better than expected inflation news. But I mean, it's not good news. I mean, if you just look at the number, right, up 0.3. I mean, if you annualize that, that's almost 4%. That's almost double what the Fed claims its target is. So why should the Fed be lowering rates if they claim their target is 2% and you're double that, which is a mile as far as inflation is concerned? Remember, when they were just a little bit below 2%, when it was like 1.5, they were like, "Oh my God, we need 0% interest rates. We need to do QE. This is horrible. I mean, our target is 2, and we're all the way down at 1.5. Right? This calls for extraordinary measures. This is going to be a Herculean task, but we got to get this inflation rate up by 50 basis points because we're below it." Well, we're 4 times more above it at 4 than we were below it at 1.5. So this is a big job to get inflation from 4 to 2. The last thing that you would be doing if you were at the Fed and you're looking at 4% inflation is, we're going to cut rates. It's telling you that rates are still too low. So how the markets could look at this and get excited, what it really proves is that the Fed is looking for an excuse to cut rates. Maybe this is it. They shouldn't cut rates, but maybe they can say, the inflation numbers are coming down, even though they're not 2%, they're moving towards 2%, even though it's like 1 month where they moved a little bit lower than the month before. But the interesting thing too, I'm watching on the day that everybody was celebrating these good inflation numbers, copper prices hit an all-time record high. They traded above $5 a pound. They've never done that before. And they pulled back a little bit. We're back below 5 now. We won't stay below for long. This is a record high. Copper prices are up better than 30% on the year, even with the decline from that little peak to yesterday. 30%. The year is not even 5 months over. Copper's up 30%. I mean, does it even make any sense that we're in this year of falling inflation, yet copper prices are soaring? And, it's not that I'm saying that rising copper prices are going to cause the inflation. No, it's the opposite. It's the inflation that has caused copper prices to rise. So if inflation is so bad that copper is up 30%, why are we celebrating this CPI number? Based on what should the Fed be cutting? And it's not like, who cares about copper, right? Copper's not used for anything, right? Oh, yeah, it's used for everything. Copper is a very important metal. I mean, it's a great conductor of electricity, not as good as gold, but for the money, it's better. Most people, you're not going to have gold wiring, but copper is what they're using, and copper is very expensive. It's used in roofing, right? It's used in plumbing, right? I mean, all these homes, you're building a home, you need a lot of copper. That's why a lot of times people go into a home or an office building and they steal the pipes because they're made of copper. Well, now those pipes are even more valuable, right? So you're probably going to have more vandalism to steal the plumbing out of buildings and then sell it. They're used in electric motors, batteries, in the whole EV industry. Copper, I think it's 12% of the battery that's used in an electric vehicle is copper. And so it is a vitally important metal. I mean, they use it in all the charging stations. And so if copper is going up, the price of everything that uses copper has to go up, right? This is how inflation works. It forces up prices, but some prices rise before other prices, right? You have the whole chain of events that are going to set into motion by the debasement of the currency. So as everybody is talking about, hey, we got this great inflation news, right? copper is telling you that inflation is not good. It's bad, right? So I'd rather believe the market than the Fed telling us inflation is under control, Wall Street, the Biden administration. Look at copper, Dr. Copper. It's telling you that inflation is anything but under control. And in fact, we got another inflation number today, and it's probably the reason that we close negative on the day, and that's import-export prices for April. Now, nobody usually talks about import-export prices. It's usually a non-event, right? No one gives a damn. But now all eyes are on the inflation data because everybody wants to know how soon the Fed is going to cut. So price data that used to be insignificant, everybody is now waiting on it with bated breath. Anything related to inflation is going to move the market because I guess that's how the algorithms are now programmed to look at these numbers. And I've talked about import-export prices a lot because I like these numbers more than I like the CPI or the PCE. And the reason I prefer them is because they're not massaged. The numbers are the numbers. It's just this is the price of what we imported. They're not adjusting it, right? And import prices soared by 0.9% in April. That is a big move. That's double digits if you annualize that. And the expectation was for up 0.2. So they're looking for up 0.2. They rose 0.9. But adding insult to injury, they went back to the prior month, March, and they revised that up from the original 0.4 increase that they reported to 0.6. So you have prices up 0.6 in March and now 0.9 in April. Not only are these big numbers, but the trend is not good because they're going up. Now, year over year, the numbers are still low at 1.1, but they've turned the corner and they are rising. And the reason they got so low is because if you remember, at one point, these numbers were going up 20% year over year, right? And I said at the time that that was a much better measure of what was happening to prices than the CPI. The CPI never got any higher than 9.1, but we got to 20% on import prices. And, that's why Biden was so unpopular or remains so unpopular because inflation was actually much higher because Americans were having to pay those import prices. And I also pointed out that our export prices were also rising much more than the CPI. And yes, that's a problem for our trading partners who are buying our exports, but it was evidence of rising production costs because that's how much more we had to charge for the stuff that we were exporting. So the import and the export prices were a much better measure of the effect inflation was having on prices than the official measures that the government uses and everybody relies on because those are faked, right? They don't fake them at the time. It's not like they get the numbers and they say, oh, these numbers are too high, go back and redo it. It's the methodology, the way the numbers are calculated. It's designed for the numbers to be low. That's just how it's worked out. And nobody seems to care about this. There are a few people out there that point it out. But so the markets saw this number and sold off. In fact, gold got hit. The dollar rose. Now, by the end of the day, gold had recovered most, but not all of the losses and immediately sold off. Gold stocks sold off and then recovered. The GDX hit a new 52-week high yesterday in that rally. The GDXJ did not, the juniors, but the seniors hit a new 52-week high. And they backed off a bit today. I mean, it's hard for these stocks to even have two back-to-back up days. Right? Even though we hit a 52-week high, this is an unloved bull market. It is really climbing a wall of worry here. Everybody is nervous. Everybody is skeptical, which is another reason that this rally is going to continue because so few people are believing in it or are taking part in it. But the reason that gold sold off, again, This is the reflexive Pavlovian response that maybe is programmed into these algorithms. Hotter than expected inflation, sell gold, buy dollars. Why? Well, this just means the Fed's going to have to fight harder to win the inflation fight. No, it doesn't. How much bad inflation news do traders have to get before they figure it out? The Fed isn't going to fight harder. The Fed lost. That's what these hotter than expected numbers prove. It doesn't prove the Fed just has to fight harder to win the inflation war. It proves that the Fed has already lost the inflation war because it doesn't have the will, the political will, or maybe even the capacity to do what it takes to win this war. That's why it bluffed and pretended it won the war when it hadn't. And it's hoping the markets don't figure that out. Anyway, we got one more commercial, so stick around. We'll be right back.
Think of your favorite entrepreneur. They wouldn't be anywhere without trusted partners. If your commerce platform is scaring away potential customers instead of converting them into lifelong fans, you have to try Shopify. That's Shopify's new sales sound. Shopify is the commerce platform revolutionizing millions of businesses worldwide. From the launch your online shop stage to the first real life story stage, all the way to the did we just hit 1 million orders stage, Shopify's there to help you grow. Whether you're selling shipping supplies or promoting productivity programs, Shopify helps you sell everywhere. From their all-in-one e-commerce platform to their in-person POS system, wherever and whatever you're selling, Shopify's got you covered. Shopify helps you turn browsers into buyers with the internet's best converting checkout up to 36% better compared to all other leading commerce platforms, and sell more with less thanks to Shopify's magic, your AI-powered all-star. Shopify powers 10% of all e-commerce in the U.S., and Shopify is the global force behind Allbirds, Rothy's, and Brookline, and millions of other entrepreneurs of every size across 175 countries. Plus, Shopify's award-winning help is there to support your success every step of the way, because businesses that grow with Shopify. But what I love most about Shopify is no matter how big you want your business to grow, Shopify gives you everything you need to take control and take your business to the next level. Sign up for a $1 per month trial period at shopify.com/gold, all lowercase. Go to shopify.com/gold now to grow your business no matter what stage you're in. Shopify.com/gold.
I'm talking about inflation and copper. Be on the lookout for the pre-1981, or actually pre-1982, so 1981 or earlier penny, because those pennies are made 95% copper. Today, they're 95% zinc, although you should hold on to those too, because they're probably worth more than the zinc that's in them. But I know a copper penny has got at least 3 times the dollar amount of copper now as the face value of that penny. So you triple your money. I mean, if you want to talk about a good investment, you have a guaranteed triple. If you just take a dollar bill and you can exchange it for 100 pennies, if you get 100 pennies from before 1981, you tripled your money. Now, it's against the law to melt those pennies down, but I mean, you could. And I think that soon there'll be a nickel's worth of copper in a penny, and then there'll be a dime's worth of copper in a penny. And there's no downside risk to that investment, because if you get a penny, it can never be worth less than a penny. So if you pay a penny for a penny, right? If you buy 100 pennies with $1, you can't lose. But, you may end up with 10 or 20 or $10, maybe more, maybe before the inflation is over, a huge windfall, because they took the silver out of dimes, nickels, and quarters in 1964, or 64 was the last year. So in 65, all the silver was gone, but they left the copper and pennies, right, until 1981. And then they took that out. But pretty soon, the metal in all the coins, it'll take longer, for a dime or a quarter, but penny and a nickel will, the metal in there is going to end up being worth more. But we didn't just get a lot of inflation data today. Remember, Jerome Powell said, no sign of inflation, right? We don't have stagflation because can't see inflation anywhere. Well, I guess he wasn't looking at the price of copper, right? And a lot of other prices for him to be oblivious to inflation. But he said, I don't see any no stagnation. Well, we got more evidence of stagnation today, or this week rather. Almost all the economic news, I mean, maybe all of it, it's not even almost all, I think pretty much all of it, was weak or weaker than expected. Look at the April retail sales. They were supposed to rise by 0.4. They were unchanged. They didn't rise at all. Now, we know prices rose, so people actually bought less because the number is not adjusted. Now, X vehicles, there was a rise of 0.2. But that was a big decline from a downwardly revised 0.9 from the month before. But if you take out vehicles and gasoline, retail sales actually fell 0.1. Now, what does that mean? That means that the reason that retail sales were not down more was because people spent more money on gas. Now, did they spend more money on gas because they drove more? Probably not. They might have even driven less. They didn't buy more gas. They just paid more money for the gas that they bought. Right? That's what's driving sales. It's prices going up. But even with that, right, we got a weak number on sales, and the revisions were all down. Empire State Manufacturing, we had a bad number in April of minus 14.3. They expected another bad number, but not as bad. They were looking for minus 10, but we got minus 15.6. So we got a bad number that was worse than the bad number we got during the prior month. Housing starts. This was another big miss. Both the starts and the permits and downward revisions to the prior month. They were looking for 1.453 million starts in April. We got 1.36 million. They revised March from 1.321 down to 1.287. And on permits, there was looks like it was this no revisions for the prior month, but they were looking for 1.48 million for the current month of April, and they ended up with 1.44 million. So fewer permits, but a big drop in starts. That's the sign of a weaker economy. Why are they building fewer homes? Because Americans can't afford to buy them. They don't have the purchasing power, and mortgage rates have gone up. But of course, if we're not going to be adding to the supply of houses, then the housing shortage is going to continue and housing prices can stay high, which means rents are going to keep going up. And this is all going to show up in the CPI. The jobless claims numbers that we got that came out this morning were not as bad as the prior week, which was a shocker at 231. And they actually revised that slightly up. They made it 232,000. But that was the biggest weekly claims number in a couple of years. Now, there was a pullback, but, 222,000 is where it came back, 10,000 lower than the revised number. But that's still an elevated number. And it still should be troubling that the low period of, ultra low and sub 200,000 weekly new unemployment claims is over, and that unemployment is now trending higher. Philadelphia Fed manufacturing also came out worse than expected. At least it was a positive number, though, but a small one. It was at 15.5, though, in April. They were looking for 7.8 in May, and we got 4.5. So lower than expected and much lower sequentially than the month that preceded it. Industrial production also came out today, I think, a bad number. They were looking for a bad number of up 0.1, and we got 0. And the manufacturing output, which was supposed to rise by 0.3, shrank by 0.3. So they got the number right. They just got the direction wrong, or the sign. It was a negative instead of a positive. And they revised the prior month from 0.5 down to 0.2. So what does that mean? Well, we're producing less, so less supply. We're printing more, right? This is more weak economy, inflation. We need production to go up. If you want prices to come down, one way to do it is to increase the supply of the stuff that you produce, so there's more stuff to buy. And now you have something to spend the money on. But the opposite is happening. So all this is stagflation. And I think that we got more evidence of that in the Walmart earnings, because Walmart came out today with better than expected earnings. The stock was up 7%. That's a big move. It's an all-time record high for Walmart. Although it's curious because I think just yesterday, Walmart announced some significant layoffs. So even though they have these good earnings, they're laying people off. Now, maybe they don't think the earnings are going to stay good. Maybe that's a look into some disappointing future earnings. But for now, the markets were celebrating the beat, and the stock rose 7% to a new all-time record high. But why is Walmart doing well? Well, I think that the main reason is that people are trading down to Walmart. So it's not that the typical Walmart shopper is just buying more stuff. He may be buying less stuff, or she. I think what's happened is people that were more upscale than Walmart, people who did not shop at Walmart, are likely shopping there now because that's all they can afford. And so I think that the higher end retailers, mid-market retailers, they're going to be reporting bad earnings because their customers are shopping at Walmart. Now, eventually, they won't even be able to afford Walmart. That's what's coming, especially when the dollar collapses and prices really go up. The people that trade down to Walmart, there's really not much lower you can go. I'm not sure, where you could shop once you can no longer afford to shop at Walmart. I would just think you don't shop at all. And that's really what's going to happen. And one of the things that may be pushing this trend is the new tariffs that Biden just announced. I get a big kick out of, looking at Biden makes a big speech to announce these new tariffs, right? And he's announcing them like he's delivering good news. Like, hey, I got great news, everybody. We got these tariffs. The tariffs are taxes. Higher tariffs mean higher taxes. How is Biden going to have a speech? And he's all excited about telling Americans that they're going to pay higher taxes. Who wants to hear that? And these are not, we're going to tax the rich. No, these are not the taxes that fall on the rich. In fact, the rich couldn't care less about these tariffs. It's the middle class and the poor that are going to pay these tariffs. And that's Biden's base, right? That's who he's playing to. That's the votes that he wants. And he's telling his own people, I'm raising your taxes. Except he's not putting it in those words. He's lying. He's telling people, we're sticking it to China. We're going to tax the Chinese. We're going to put tariffs on these Chinese products. We're really going to make China pay. China's not paying those tariffs. The Americans are paying these tariffs. The people who buy Chinese products. The Chinese aren't paying the tariffs. No, they don't apply. If the Chinese buy some of this stuff in China, the tariffs don't apply. It's American citizens who want to buy Chinese products. They pay the tariffs because China has to increase the price by the amount of the tariff. So the Americans get the bill. They pay the tariffs. Now, maybe they don't buy the Chinese products. They buy another product that's more expensive than what the Chinese products used to be. But they don't buy the Chinese products anymore. But so maybe instead of paying the tariff, they pay higher price for a non-tariff good, but that's still a tax because that extra price that you're paying because you can no longer afford the Chinese good, that's your tax. In fact, look at these tariffs that Biden announced, happily bragging about it. Hey, look what I did. Vote for me, right? I'm really sticking it to China, right? 25% on steel and aluminum. So that increases the price of steel and aluminum. Now, you might not care because most Americans don't directly buy a lot of steel or aluminum, and maybe they buy aluminum foil, right? But they don't buy a lot of steel or aluminum, but they buy a lot of products that are made with steel and aluminum. What do you think is going to happen to the price of those products? Going to go up. And, it also makes, for example, American cars. So you're an American car company, and now you got to buy steel, and your steel prices go up. Well, that makes your cars less competitive, not only domestically, but the cars that you produce here and you want to export. Now that you got to produce them with more expensive steel. So there's all kinds of negative repercussions from these tariffs. 50% tariff on semiconductors. Like we don't need those semiconductors, chips. What's going on now with AI? Right? There's a lot of demand for chips. Why do you want to make chips 50% more expensive? This is all going to hurt Americans, make the American economy less productive. 100% tariff, 100%. That's double. 100% tariff on EVs. You want to buy a EV made in China, it's going to double, cost you double, thanks to these tariffs. Do you think that's good news? Biden likes to pretend, we're all about the environment. We want people to go solar. 50% tariffs on solar panels. 50%. People are supposed to be converting to solar. There's all kinds of tax credits. You invest in solar panels, you get a tax credit, right? So the government is subsidizing people for using solar power. Tesla gets subsidies for selling battery-powered cars, right? The government is paying Americans and trying to encourage them to use solar power. Yet, we now want to impose taxes on them when they do it. You want to buy solar panels, now the government is going to drive up the price of the very panels it's subsidizing you to buy. That's how ridiculous. Government has two policies at cross purposes. It's like they subsidize tobacco farmers. They give tobacco farmers money to grow tobacco, and then they spend a bunch of money advertising to Americans to try to encourage them not to smoke. They're on both sides of the argument, right? Why are they subsidizing the tobacco farmers and then spending money to convince you not to smoke the crops that they just subsidized to be produced, right? So this is how the government operates, but they're supposed to be green, global warming. Why are they taxing Americans for taking actions to lower their carbon footprint? They're making it more expensive to get electric cars, to get solar panels on your homes. And it's Americans that pay all this. It's too bad Americans don't understand this. I said, once upon a time, Americans knew what tariffs were because the country ran on tariffs. And I'm not against tariffs per se. If we could get rid of the income tax and only have tariffs. Now, 50%, 100%, that's insane. They shouldn't be that high. But if the government didn't have an income tax and it was going to fund itself on tariffs, okay, I'm okay with that. That's better than an income tax. Now, of course, the government couldn't have all these programs if it was living off of tariffs. That's the point. When the founding fathers wrote the Constitution and they made it so hard to have a direct tax like an income tax, that was because they expected that the federal government would not resort to income taxes unless it was emergency, like a war. The founding fathers expected and told everybody in the Federalist Papers that the federal government would survive on excise taxes. That was it. That's how it was going to pay its limited bills because it wasn't supposed to do much in peacetime. The federal government's role was supposed to be during a war. In peacetime, you weren't even supposed to notice that the government was there. That's how small it was supposed to be. The reason we have an income tax, again, is because the government told the voters, we can get rid of these tariffs that fall on the middle class and the poor. We'll close these tariffs if you just let us have an income tax on the rich people, on the Carnegies, on the Vanderbilts, on the Rockefellers. We'll soak them with a 4% income tax because they're rich. They can afford that small tax. And in exchange, we can get rid of all the tariffs. And the people were like, yeah, that's it. We want that. Sign us up. Pass the 16th Amendment. We're tired of paying these tariffs. So Americans understood that they paid tariffs back in 1900, 1916, whenever we got the income tax. They don't know it now. That's how foolish the American electorate is. They believe that China pays U.S. taxes. They don't. Tariff is a tax, right? It almost sounds like it. It's a big T. Tariff is a tax, and only Americans pay taxes imposed by America. Now, also, it wasn't just Biden that was talking this week and talking about his tariffs, but Jerome Powell gave a talk at the Foreign Bankers Association in Amsterdam. So we got to travel to the Netherlands to say the same BS that he says here in the United States, right? But in any event, the significant things that Powell said, one, of course, was he claimed and reiterated the idea that the current rate of interest is sufficiently restrictive to return inflation to 2%. The markets like that. They want to hear that. And that the Fed just has to be patient and wait for the restrictive rates to do their job. And their job is to bring inflation down to 2%. And Powell is convinced that rates at the current level will do their job because they're restrictive, and they will bring inflation down to 2%. Now, the problem is the rates aren't going to work because they're not restrictive. So they can't do the job. They're not doing the job. They are incapable of doing the job because the rates are too low. Now, why did Powell stop raising rates? Because, the wheels were coming off the bus. Banks started to fail. So he backed away, right? He was raising rates until something broke, and then he stopped. Now, he couldn't say that, so he had to make up an excuse. Well, we've stopped because inflation is coming down. Even though it's not at 2%, we think it's going to get there. And so we're going to look forward. We know there's a lag. And now, even though the numbers are worse than he thought they would be, and he acknowledged that, he said that we're making progress more slowly than we expected, but we still expect to get where we thought we were going to be. We'll just get there a little later. And so that all that means is that we have to keep rates where they are for longer than we originally thought before we can start cutting the rates. A couple of other interesting points that were made as a result of, he took questions, because he was talking to reporters. So there was a Q&A. And somebody asked him if he had any regrets, right, over some of his prior policies, like all the money he printed during COVID, and how long it took the Fed to react to inflation that it described as being transitory. And Powell basically said, no, I have no regrets. Nothing. I wouldn't change anything. We did everything right. I mean, even with the benefit of hindsight, he should at least say, well, at the time, given the information we had, I did what was right. But now with the benefit of hindsight, I can see that I made a mistake. No, he's not even admitting to that. Even with the benefit of hindsight, he's saying I didn't do anything wrong. And he doesn't see any connection, at least that he's willing to admit, between all the money that they printed during COVID, all the QE, the 0% rates. He doesn't see any connection to that to what happened to prices in the years following that, right? So absolves the Fed of all responsibility for this inflation. We didn't make any mistakes, right? If that's truly what Powell believes, then there's no hope, right, of them solving any problems that they clearly don't understand. Powell has no idea where inflation comes from, so how is he going to get rid of it? And whatever he even believes about what's about to happen with it, you should just discount it completely. Now, the other alternative is he's just a liar, right? Again, those are the only two alternatives that there are. Either he's ignorant or he's a liar. Neither one of them is good, right? And neither one of them means if he's ignorant or a liar, why believe anything that he says? Because either he doesn't know what he's talking about and what he's saying is wrong, or he's lying and what he's saying is wrong. There's no chance that what they're saying is right. Yet everybody, waits with pins and needles, bated breath on every word. And they parse through every, word and then every official statement to try to figure out, right? Like they're reading the holy scribes trying to figure out, what the Lord is trying to tell them, right? Like there's some kind of deity. These guys, again, they're either completely incompetent or they lie about everything, in which case there's nothing that they say that should be of any real relevance. Now, another thing he was asked about was the federal budget deficit and the national debt. And he was willing to concede that the path we're on is unsustainable. But that's it. He made sure to say the debt itself is not unsustainable. We can handle the debt. It's just the path that is the problem. No, it's not just the path. It is the debt. Maybe it was the path a couple of decades ago, but we've already gone down that path to the point where the problem is not just the path. It's the debt itself. Yes, we're on a bad path, but we have an enormous amount of debt, and that's already a problem. And that's one of the main reasons that Powell is not raising rates, because the debt is a big problem. If we didn't have so much debt, the Fed could actually fight harder to win the inflation fight. Rates would already be higher. They're not, because that massive debt that he claims is not a problem is a gigantic problem, and he knows it. He just doesn't want to admit it. So he says we're on an unsustainable path. Okay, well, when does that path, become the actual problem? Because they were saying we were on an unsustainable path 20 years ago. And of course, they were right. But how long do you travel down this unsustainable path before you reach unsustainability? Because I think we're already there. I think we've been there for a long time. That's why interest rates have been kept so artificially low, because it's the only way that we can sustain an unsustainable debt. But Powell's not going to admit that. He just says, well, we got to do something sooner or later. He did say sooner is better than later. Well, if that's the case, if doing something about the debt sooner is better than later, then why not force the government to do something sooner by raising rates? Why pass? Every time somebody asks you about the budget deficit, why say, oh, I can't talk about that. Sorry, that's off limits. That's not our bailiwick, or whatever he says. So we got to stay in our lane. Yeah, that's his expression he likes. Our lane doesn't include fiscal policy. Of course it does. That's part of their lane. It's a broader highway they're on. But inflation, it takes two to tango. Fiscal and monetary policy, it's hand in glove. A central banker's primary concern has got to be fiscal policy. So to say that, well, that's not in my lane, no, that is precisely his lane. The reason that Powell doesn't want to say that, the reason he cops out and invents an excuse so he doesn't have to answer these questions, is because he doesn't want to embarrass the politicians. He doesn't want to be forced to tell them, of course, you morons, of course we have inflation. You guys are running these huge deficits. What do you want me to do? Force you to default? No, I'm trying to cover your asses. That's what I'm doing. I'm bailing you out. I'm making it so you don't have to make any of these difficult political choices. So if Powell's going to say it's better that we address the problem sooner rather than later, what he needs to do as Fed chairman is stop making it easy for the politicians to kick the can down the road. Because you know what? We're not going to deal with them later. If we don't deal with them now, we're going to have a crisis later. And so then we're going to deal with a crisis. We're never going to deal with the problem because no politician has the guts to do it, and neither do the central bankers. So instead, we're going to have to suffer the consequences of a crisis. Anyway, that's wrapping up today's podcast. This is going to be my last podcast from Puerto Rico for a while. We're leaving over the weekend. My kids are finished. In fact, my younger one tomorrow, or not my youngest, my younger son, he graduates from elementary school. We actually have a ceremony to graduate tomorrow morning. And then tomorrow's the last day of school, which used to be a big thing when I was a kid. Not so as big anymore, although it's big because now I don't have to take the kids to school. But summer vacation begins when the kids are out of school. And so that means that I can leave Puerto Rico. Not that I'm anxious to leave. I mean, I enjoy being here, but I also enjoy the change. And so we're going to be leaving over the summer. I won't be back in Puerto Rico until around August 10th. And so that means I'll be doing my podcasts from the road. In fact, the ones I do in my Connecticut house, I had to redo. I had some problems in the studio down there, and they've been working on it. So I probably don't even have the studio down there. I'm probably just going to be using my laptop. For part of the vacation, I'm going to be on that Real Estate Guys cruise. I told everybody about that. I mean, if you're interested, go to Real Estate Guys Summit at Sea. We're going to be doing that for about 10 days. And I'm going to be traveling around Europe the way I did last year. This time only about 3 weeks in Europe, but I will take my laptop with me on that trip. and I will be doing podcasts remotely during that time. So stick around. Again, they haven't been quite as frequent. I've been pretty busy, and to be honest, there hasn't been a lot of really important news. But if anything significant happens, no matter where I am in the world, if it's a big enough event, I will take time to reach out and do a podcast. But I'm sure I'll still manage to do at least one a week, maybe two. We'll see how it is. But they're going to be on my laptop. Anyway, that's it for today. If, again, you like the podcast, give it a like, give it a thumbs up. Subscribe to my YouTube channel if you haven't already subscribed. In fact, follow me everywhere I'm on social media, particularly on X, where I continue to put a little distance between myself and 1 million followers. I have to have that distance, so in case the bots, go away and I start to lose some followers. But anyway, have a great weekend, everybody, and stick around because I've got a lot more podcasts coming up for you over the summer.